Question: A and B are partners in a firm sharing profits and losses in the ratio of 3:2. On 31st March 2020, their balance sheet was as follows. Balance sheet: liabilities, creditors 38,000, loan by Mrs. A 10,000, loan by B 15,000, reserve 5,000, A's capital 10,000, B's capital 8,000. Assets: cash 11,500, stock 6,000, debtors 19,000, furniture 4,000, plant 28,000, investments 10,000, profit and loss account 7,500. Balance sheet total 86,000. The firm was dissolved on 31st March 2020 and both the partners agreed to the following. A took investments at an agreed value of rupees 8,000. He also agreed to settle loan by Mrs. A. Other assets realized as stock 5,000, debtors 18,500, furniture 4,500, plant 25,000. Expenses of realization came to rupees 1,600. Creditors agreed to accept rupees 37,000 in full settlement of their claims. Prepare realization account, partners capital account and cash account. First, transfer external liabilities to the credit side of realization account. External liabilities are creditors and loan by Mrs. A. Creditors 38,000, loan by Mrs. A 10,000. Write it on the credit side of realization account. Credit side creditors 38,000, loan by Mrs. A 10,000. Then loan by B, loan from partner. Transfer it to the credit side of cash account. Cash account, credit side, loan by B 15,000. Then a reserve, distribute a reserve in profit sharing ratio. Profit sharing ratio 3:2. A's share 3,000, B's share 2,000. Then reserves. Next, capitals. A's capital 10,000, B's capital 8,000. Draw down capital to the credit side of capital account. Capital account credit side balance draw down 10,000, 8,000. Next, assets. First, cash. Draw down cash to the debit side of cash account. Transfer cash to the debit side of cash account. 11,500 balance brought down 11,500. Then next, other assets, stock, debtors, furniture, plant, investment. All are assets having realizable value. Transfer it to the debit side of realization account. Stock 6,000, debtors 19,000, furniture 4,000, plant 28,000, investments 10,000. Next, profit and loss account 7,500. Profit and loss account on asset side means it is a loss. It is an accumulated loss. Share this loss among the partners in their profit sharing ratio. Write it on the debit side of partners capital account. Capital account, debit side profit and loss account. First item profit and loss 4,500, then 3,000. Next, adjustments. First adjustment, A took investment at an agreed value of rupees 8,000. He also agreed to settle loan by Mrs. A. First, for the investment taken over by A, A took investment at an agreed value of rupees 8,000. Realization of assets are recorded on the credit side of realization account. First, investment, realization of investment, it is taken over by A. So, realization account, third item. Realization account, credit side, third item. A's capital account, rupees 8,000. That is the investment taken over by A. Then, he also agreed to settle loan by Mrs. A. Payment made by partner. It is a payment made by partner. Liability paid by partner. Write it on the debit side of realization account. Realization account. Sixth item, A's capital account, 10,000. That is the liability paid by Mr. A. A's capital account. Then second adjustment. Other assets realized as stock 5,000. Debtors 18,500, furniture 4,500, plans 2,000, plans 25,000. Realization of assets, realization account credit side, cash, total cash realized from assets 53,000, stock 5,000, debtors 18,500, furniture 4,500, plans 25,000. Total amount realized 53,000. Next, third adjustment, expenses of realization came to rupees 1,600. Expenses of realization, realization account debit side, cash account 1,600. Then creditors agreed to accept 37,000 in full settlement of their claims. Payment to creditors, realization account, debit side, cash 37,000. Next, balancing of realization account. Debit side total 1,15,600. Credit side total 1,09,000. Balance 6,600. Balance on credit side means loss. Loss on realization 6,600, which is divided among the partners in their profit sharing ratio. A's share 3,960, B's share 2,640. Next step, transfer cash account on the debit side of realization account to the credit side of cash account. Debit side, realization account debit side, we can see two cash accounts there. First cash account rupees 1,600 and the next one is 37,000. Transfer these two cash accounts to the credit side of cash account as realization. Cash account credit side. Second item realization 1,600. Third item realization 37,000. Next, transfer cash account on the credit side of realization account to the debit side of cash account. Only one cash account is there, that is the total amount realized from assets. We can write it individually. 5,000 cash, 5,000 cash, 18,500 cash, 4,500 cash, 25,000. Here total amount realized is written on the amount column, that is 53,000. Transfer it to the debit side of cash account. Cash account debit side, second item realization 53,000. Next, transfer all capital accounts to the capital accounts of partners. First, debit side, A's capital account is there. A's capital account 10,000. Write it on the credit side of partners capital account. Partners capital account credit side, realization 10,000 in A's column. Next, realization account credit side, A's capital account 8,000 is there and A's capital account 3,960 and B's capital account 2,640 is there. That is that 3,960 and 2,640 is the realization loss. Transfer these three capitals to the debit side of capital account. Capital account debit side realization 8,000. Then again realization 3,960 and 2,640. These two amounts are the realization losses 3,960 and 2,640. Next, balancing of partners capital account. Balancing figure 6,540 and 4,360. A's balance 6,540. B's balance 4,360. Transfer this cash to the credit side of cash account. Cash account credit side, A's capital account 6,540. B's capital account 4,360. These two amounts are the capital account balances of A and B respectively 6,540, 6,540 and 4,360. Next, cash account. Balancing of cash account, debit side total 64,500, credit side total 64,500, same amount.